Hello everyone, welcome back to the RationalInvestor.com's Weekend Frivolity, our Broiler Chicken Show. Bark, 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 bark. Frankly speaking, I'm not even quite sure what the hell we're going to talk about here this weekend. It is Labor Day weekend, it is the holiday weekend, and you can really see it right across the major cryptocurrency assets. They're not doing anything. And if anything, we were watching price movement yesterday, and price jumped all over the place, but on no volume. And so as a result, all those moves up just slowly eroded back down to earth. But I think we have a YouTube page here, so let's go see if this YouTube page is actually working. How the hell do I do that? Let's pop on over here, and hopefully this thing is broadcasting away. Oh, yeah, there it is. So I do see the YouTube. I think we did this as a public broadcast. If you over on YouTube happen to have a question, feel free to. Actually, I think OBS records the input straight from YouTube, so you probably didn't even hear me while I had that in the background. But if you are on the YouTube page and you have a question, feel free to ask. I'll just type in a little hello all. And as I sort of said a moment ago, market is very, very quiet here on this holiday weekend, so I don't really see a whole heck of a lot to talk about. But site peeps want their weekend dose of frivolity. So we've got our cheerleader from the level 1 program who just recently graduated. I think, Colleen, you're level 2, weren't you? I can't remember. Anyway, she was in the lounge demanding that we do broiler chickens, and so here we are. So if you have any questions, feel free to ask. I've got about 5 different windows here running, so it's kind of difficult for me to hop in between them all, but I'll try my best here. Maybe we'll put you over there like that and like that, and at least we got the OBS screen on there so I can see that we're still recording. So, all right, well, where do we begin? Once upon a time in a land far, far away, yield Bitcoin. I'm sure you guys crypto oriented. It's not a heck of a lot to really update here. It's basically the same as I've seen for I think pretty much the entire summer. I think it's not a bad idea to just take a look at your charts from a weekly perspective. It almost made me laugh. I went into this TradingView chat room, and these people are like posting 1-minute charts, and it's like, oh my god, you can't be serious. So, I mean, I hope they're making money, but I don't know whether I would be making your investment decisions about your future off of 1-minute charts. That's a bit dangerous. And especially given the holiday weekend, you can literally see that participation is like almost down to nothing. Be very careful with what you're seeing on the charts. There's going to be a lot of FUs through this weekend. I think that's exactly what we see when we look at those lower time frame charts. So be careful, everyone, please. I suppose, this is an extremely messy chart. I think what might actually be a half decent idea is, why don't we, for today, we'll just take a look at a brand new chart, totally spanking clean, and just pick it apart. Maybe it'll be a fun exercise. I don't know. Colleen said in the lounge earlier, because I said I have no idea what the hell to talk about today, and she's like, we just get you going, just get the ball rolling, and inertia will just take over, or something along those lines, right? I just have to get going. So, Colleen says here, I told you to take the day off. So, we'll just sort of start at the top. I think it's not a bad idea. I think it's just because I love the sound of my own voice, Colleen. But like I said earlier, it's not a bad idea just to start your analysis off the highest time frame charts and just ask yourself, where the heck are we? And like 3 reasons for a trade, all that kind of conversation. It's interesting how a lot of these charts don't have that much data. But just start at your highest time frame charts, and of course, how many reasons should we add to justify taking a trade? Let's see if anybody on YouTube knows the answer to this. Anybody on YouTube? If you were going to risk your hard-earned money in the marketplace, how many reasons should you have to justify taking the trade? Excellent. Andrew. I don't know whether I'm pronouncing your name correctly. If I'm not, please forgive me. But that's right, man. Good old Dan. Of course, Dan's been around TRI say for a while now. I think he's gotten the message, so that's good. But yeah, ideally you want to have 3 unrelated reasons. Now, try not to fall into the trap of looking at like a whole bunch of price momentum indicators and saying, look at MACD, RSI, and stochastics are all giving buy signals. There's my 3 reasons. That's kind of cheating, because really, technically, all of those price momentum studies basically are 1 reason. But ideally, we want to start out and try, value. I want to get something out of this free broadcast that's going to make me a better trader. Well, write this shit down. And the worst part about it is that, people charge like ridiculous amounts of money for this information. I mean, you're getting it for free, so just take advantage of this, please. And so we say that ideally your first reason should always be, if I'm going to take a shot somewhere, what do you think your first reason should be? And hint, hint, hint. They're the 3 most important words in every real estate transaction. Anyone? Geo Joseph. Well, you're welcome, sir. Hopefully I can make a positive difference in your life. That's the whole reason why I'm doing all this. A location. Oh, no. Tone E.D. Structure is actually the last reason we want to think about taking a trade. But Andrew got it. It's location. And ironically enough, half a trader's job is just simply to try and buy against low ends of ranges and sell against high ends of ranges. And of course, if you get into a rip-roaring bull, you don't have to, if you're long, that is, you don't have to be selling everything right off the bat. But ideally we want to start with location. So, a handy tool that I learned years and years and years ago is this thing called Fibonacci Retracements. And really, you saw how I did that on TradingView. You just go on into here and just come down to Fib Retracements. And that spits up this tool. The default tool, though, is kind of messy, right? If we go apply defaults, they kind of make it a bit of a challenge, because not only do they include retracements in the study, but they also include extension levels in the study. Interesting, like they've got just here default 1.618, 2.618. Then they jump out to 3.618. And 1.618's in mathematics is called the golden ratio. So I suppose there's some logic to why they set up the defaults that way. I remember when I first started on TradingView, they used to have this fib as 76.4 or something like that. And it took them forever, and I kept lobbying and saying, no, that's not a fib, it's not a fib, change it to 786. So it's, it's nice to see that they, TradingView itself has evolved over time. In my education program, I think this actually doesn't really help you, because you don't really want to be combining retracement and extensions in the same study. So I often suggest to our level 1ers, you go in and create like unique studies. So that would be, this is my default retracement tool. And then if I'm going to draw extensions, I'll create an extension study. Where are we here? Just off of that, where it's just 0 to 100 and then the extension levels following. As you can see, I've got the 1.618 kind of like their default, but I'm a big fan of things like head and shoulders patterns, and actually I guess it would be the other way around, wouldn't it? Let's go the other way. Let's see if I can do this. And Brian's just having fun on a Labor Day weekend, something like this. Oh, no, that's horrible. Let's try that again. Alright, so we go. Alright, so something along those lines. Where the head and shoulders is really, you could argue this is a fractal. It's a very common sort of pattern in nature. Left shoulder, right shoulder, head, and your neckline. And what should happen here is if this fractal fires, the target of this should be just nothing more than a replication of this trading range up above. And we see this pattern happen a lot. Actually I just did the level 3 program. We just had our our program review. But last week we did trading with the DOM and understanding that the market moves in these sort of levels, right? And hopefully what you see here is, this is why I like to follow the 200%, because in essence all this is just a replication of this range just on the other side of the neckline. When I teach people to do extension studies, I like to have all of these extensions, which are fib extension levels, and then I throw on 200% for that sort of fractal kind of concept, and that creates what I like to call the parking garage. And time and time again, we often see markets rally up into these sort of parking garage kind of concept levels, and then eventually roll over. Conversely, with regard to fib retracements, big fan of 61.8. Again, that's sort of that 0.618, 61.8. On the site, we affectionately call this level the mountain man level, and I used to trade with a guy who used to trade crude oil, and the guy just religiously bought and sold 61.8s. So you probably see on my videos and stuff, we do sort of a very sort of tongue-in-cheek, we like to call the 61.8 the mountain man level, because that's what that trader's name was. And so you probably, if you ever see my charts and you see these M's on here, woohoo, that's mountain. Me personally, I'm a huge fan of 78.6s, and what I like to call, don't really have an icon for it, but I like to call it the line in the sand. And literally what this means is, if you have an asset that's zipping up here, woohoo, if this is still a bull, wherever this bottom is, what'll often happen is the market will ultimately put up a fight and actually end up actually bottoming right off that 78.6. That happens so often, it's ridiculous. So I like to highlight this sort of zone in the Fibonacci retracement study, because we see often a lot of sort of the smart money, they buy down markets, they don't buy up markets, and if they were going to be hunting using things like Fibonacci retracement levels to hunt, and like I said in that DOM video, in that DOM module that we just did for the level 3s, I even include a little sort of demonstration video from crude oil, just on a day trade basis. And as the market's sort of working its way down, everything's on the DOM is all very quiet and it's just very orderly. Then all of a sudden you come into 61.8 and you can just see all the algos start to come alive and the DOM starts jumping around and stuff. So it's just it's a good analogy of when we should start anticipating that the smart money should start coming in. And then, like I said, quite often markets just they're massive selling pressure, and it actually takes time for things to sort of settle down. And we often see markets ultimately, they might even lose this 78.6, but ultimately they end up bottoming off of that. So, in a lot of my sort of public videos and stuff that I do for people, I say if you're going to concentrate on an area where to start thinking about being a buyer, well, use this as a really good location tool. And then conversely, if you have like a rip roaring bull market, actually here, let's maybe do something like, and the market breaks out violently, where should you look for exhaustion? And quite often we see up in the parking garage. So, these are reversals. So these are really excellent sort of trade location tools. So with this kind of thought pattern in mind, let's go see if Bitcoin did anything like that. Obviously, big blow off top into CME event, big orgy. Everybody's going to get rich buying Bitcoins. Maybe not. If we start off with just a very simple retracement study, something along these lines, and we notice, gee whiz, there is that reload zone. Like I often suggest to people that, if you can do one thing to sort of, prevent you from participating in markets that are really overbought, just force yourself to, and this is why we build trading plans, because quite often it's difficult just on the fly do this. But if you build into your trading plan, and reason number one, if I'm thinking about buying an asset, I'm not allowed to buy unless we are at or below reload zones. And here's an excellent illustration of that, where basically, had you just simply waited for reload zones, even now, if you'd done any buying anywhere through this green box, you'd be feeling pretty good right now. I mean, it wouldn't be a terrible situation. And I often suggest to people, if you want to try and keep things as simple as possible, I have 2 rules of investing. Rule number 1 is we want to try and work with that, 3 reasons for a trade kind of idea, and they should work a good 2/3 of the time when you look back over time. Try and create like some sort of algorithm that says if this happens and that happens and that happens, I buy. If I don't see that, then I don't. For people who don't want to be watching the screen 24/7, and you've already done your fundamental analysis and you believe in the story, yada yada yada, I don't really have a problem with you going in and this speaks to more about rule number 2 of investing. Don't ever risk more than 5% of your portfolio on any one single idea. I really don't mind people putting themselves on just like a little dollar cost averaging program and just going in, and you probably heard me say this in years gone by, just doing little nibbles. We're in reload zones, and I'm just going to take my nanny nibbles approach to investing, and I'm just going to be nibbling away here because we are at or below the reload zone. Let's say you threw 1% of your portfolio at this thing every time, right? 1, 2, 3, 4, 5. This will probably give you an average cost like maybe somewhere right around there. And of course, on this subsequent rally, that's when you probably, let's assume that maybe your average, because you bought a little bit here, maybe you bought a bit more here, who knows. Maybe you loaded up entirely as of this point, somewhere in there. But let's say your average cost at the end of the day came out to like, $5 or $6 grand. Well, you could very easily have sold half on a double at that level right there, and now you're basically sitting on a free investment for the rest of your life. It's pretty straightforward stuff. I do understand that there are a lot of people that are like, oh yeah, but I want to time my purchases, and I don't want to sit on anything, and I don't want to just, watch it go to zero. that's half of our sort of fundamentally why are you invested in this thing. I do like the idea of Bitcoin proof of work. You can come up with some sort of cost of production. What was that? Somebody just had a comment in here. What does that say? Gotta hop to YouTube on the way. Oh, okay. Well, take it easy, bud. Say hi to the big guy for me. And actually, maybe pray for Brian too. You never know. Always prayers are always good. So, I guess the message that I would have is if we just start this conversation at location, which should be your first reason to justify taking a trade. Hopefully, everybody can see here. Okay, well, that location makes sense. And what's really sick about this, and it just makes you sick to your stomach when you see this. Hopefully everybody, after what I just said about 78.6's lines in the sand, you look at this and you go, son of a gun. That was a W right down there, and it broke out and it confirmed the W right on that 78.6 level. I mean, people, please, this is gold. Learn this. It's almost funny that like some people come on these broadcasts and are like, man, I can't believe this. This guy's just giving this stuff away. I mean, it's right there. I just walked you through the whole lecture about 78.6s, and you can see Bitcoin did that. It gave you the most incredible W here. All right, so, reason number one, location, right? And hopefully everybody can see, oh, gee whiz, okay. That was pretty damn good location. What's really interesting about this, of course, is you can flip this study around. And by definition, if this is our bottom and we do fibs going back up top, well, same logic works the other direction. So if we just take that off the screen for now, the first one, and we do our study from just this low that we drew right here, back up top, we should expect the exact same logic going the other direction. That if I was going to hunt for an area to be a seller, then I probably should be thinking, remember what I said about all the algorithms and all that crap coming alive at 61.8, and our line in the sand, 78.6s. We can even move Mountain Man up here, and lo and behold, if we do that study going back up top, there's good old Mountain Man. So I think this is actually a really cool demonstration of the reload zone concept going both directions. It shouldn't really surprise us that price stalled where it did here. It shouldn't be shocking. So where does that put us now? All right. We had the beautiful bottom of 78.6. I think all of these people, and hats off to you if you had the balls to take that trade. I mean, it was just one hell of a trade. What was really interesting, and Andrew, I don't know whether you follow me on Twitter and stuff, but I'll tell you, when this W came in here, and really it was through here, we also had the second reason to justify taking a trade. Does anybody know what the second reason should be? And keep in mind, we're working off a weekly price chart here. Anybody know what the second reason for us to justify acting in the market is? 3 reasons for a trade. What's reason number 2? Very good, Andrew. So check out what happens, and this is so cool. Check out what happens. We'll just do something like a really simple, like MACD. Big Daddy Mac will make ya. Boom. And we look at our MACD and we see, oh boy, it made a really nasty low there. Like here, why don't we don't need to look at the actual indicator, we can look at the histogram. I like to look at the histogram, and this is the way that I use, whoops, that's not what I wanted. This is the way that I use a lot of these raw momentum push signals, is I like to follow the histogram. And hopefully what you can see here is price was making lower lows, but the histogram was not making lower lows. In fact, higher low, And then right in here, right about there, you'll notice that we put in a W. Right? Something like that, right? So we went down, up, breakout. The W is confirmed. Down, up, down, breakout. Right, and if I just hide that, oh, that sucks. Won't show that. Anyway, if I just move that up, hopefully you see W. So one could argue that indicator confirmation, as of this point right here, we have trade location, line in the sand, super awesome. And we have a nice little breakout on momentum. So actually, technically, as of this point, we have 2 of the 3 reasons to consider taking a trade. And now, this is where tone E.D, Hermes Lord. This is where your answer to that first question comes in. So what is the third reason to justify taking a trade? And I mean, seriously, people, like, this is a cornerstone of what we teach on the site. Of course, if you need help learning this stuff, I'm just going through this really quickly. That's the whole point of our education program. I don't know whether there's any people on YouTube. Dan, you've done the education program. Can you just tell these people, when you go through the education program, do we teach you how to do this on your own? I don't know whether there's anybody on YouTube page there that can, that's part. Colleen, you're in here, aren't you? Did you take off? Maybe you can just pop into the YouTube page and just confirm that, we go through this very, very slowly. And teach you step by step, all the different tools and how to build them and stuff like that. So I'm doing this, just a crash course here for you. But anyway, answer to that question, tone E.D, do you see how now that we have location, we have indicator confirmation, now you can start hunting for that structure. Does that make sense? Tone E.D. Everybody's waiting. What's the answer? Tone E.D. He's still watching. He's probably not even watching anymore. Anyway. So, point here is, what does structure look like? Well, structure can take many forms. We talked earlier about one type of structure that's very popular, if you're thinking bull, is that head and shoulders concept. Or, in essence, this head and shoulders is nothing more than a fractal. So, a fractal looks something like this, where you have this point in the middle is higher or is lower than this point over here, and this point over here is higher than this point here, and it creates this sort of head and shoulders concept. That's really one of the sort of cornerstones of technical analysis, is this concept called a fractal. Also, and what I would highly recommend, I think everybody really should try and learn this, is the idea of the double bottom. And basically, double bottom just looks like a W. And the more it looks like a W, the better. I often see people go like, "Hey, Brian, is that a valid W?" And really, you want this low tested in earnest. Sometimes when you see this happen, it'll come up here, and then it'll have to come all the way back down and test this original low, and then W out. So market structure, sort of that final piece of the puzzle. And hopefully what everybody sees here is, gee whiz, that looks like a W. And what's really interesting about the Bitcoin chart here is you can see we're like, okay, we got location, okay, we're starting to get signs of divergence. Okay, can I get a W? And notice how it went down and then up and then down. Okay, this is looking good. You know, and then up and then down again. All right, it's looking good. You know, come on, give me that W. Give me a breakout, right? And then it went up and then it went down. All right, these W's are getting really tight. But it never could actually confirm the W. So, you know, last summer was just such a great analogy of why we have to wait for that actual W level to confirm. So here you can see it went down and then up and then down and then up. Are we going to W? Oh, not quite. And then all of a sudden, kapow, W. Right there. Boom. And maybe if I, well, alright. I guess we'll go over here. I thought I could just get rid of this quickly, but nonetheless. Alright, if you want help seeing the W's, maybe it's a good idea just to simply change your chart to a line chart. And hello, can you see the W now? See how I kept trying to W all late last summer? We had a cute little W come in there, produce this rally, and that exhausted itself. And really, this is what I'd love to see is, come on, give me that W up through here, and it just never could. And what's worse about this is why it's dangerous to sort of assume this W's. Because you might be like, you know, okay, this looks like a W. We're going to rock and roll here, right? And you're like, all right, yeah, it's a W. But it never did go through here, so it never did confirm the W. And the darn thing goes and it M's out. Ugh, crap. So it's a bit dangerous to front run the W, but I think you can make the argument pretty solid breakout of the middle of the W here. And that was about, what, $4,200. So, you know, put it all together. I think it's pretty obvious where the buy signal, if you will, looking back in hindsight, of course, is always 2020. But I think it's pretty obvious where the buy signal was. What was interesting about this rally, and it's kind of surprised me a bit, but I guess it makes sense in hindsight, of course. Like I said, hindsight's always 2020. But I remember last winter we were sort of conjecturing, you know, if this is a bottom, where should we expect to see resistance? And I've been drawing like you know, levels off of these highs, looking for resistance at about 6,000 or so. But ultimately, the market really wanted to operate off the entire range, which I guess, you know, it makes sense. I don't think it's shocking what I'm seeing here. I think you could also make the argument too, you know, and I remember last winter we talked about, you know, if we're going to see where resistance is as we were working our way higher here, we need to go back and look left and look at these key pivot highs. This is, you know, market was rallying. Where did the rally stop? Where did the bears step in against that high there and against that high there? So really, it makes sense why we rallied up into this area and had to pull back a little bit. I think you could actually make the argument, believe it or not, in my eyes, just looking at this, that we could go like almost like a massive fractal along those lines. And a breakout through the top here projects quite a bit higher, actually. You know, like this isn't pretty. I'm not going to say this is polite and well formed, but you can kind of see the head and shoulders there. So if that's the case, then actually that does project quite a bit higher here for Bitcoin. So fingers crossed. I haven't talked about it too much here, but I really like to follow the 38.2 fib level. I used to work with a guy who he used to trade, I think, on the NYMEX, Ray Burchett, and he would always say you have to wait for 38.2s to resolve themselves. before you can make any clear direction of trend. I'm getting the impression when I look at that chart, that's kind of what this event was right here. As I'd said last winter, I was drawing these fibs just off of these highs, and I was looking for some resistance in here, but the market just blew right through those levels. Probably a good sort of little piece for you. If you see the market just blow through your levels, then that's basically the market telling you, you know what, I'm not operating off of this study. I'm operating off of some other study. And frankly speaking, I think the proper study was the entire 52-week range. I think also too, and this is really cool. So if you want to sort of write this down, what did I learn today? Everybody should have their journals out when I do these little sort of broiler chicken shows for everybody. I like to drop little tidbits. I think you can learn stuff as we just sort of go along here. But W.D. Gann was a very famous technician that lived about 150 years ago. I guess about 100 years ago. And he ate, lived, breathed, and drank the 50% rule. So that's this number right here. And one of the very first sort of lessons that I ever learned, one of the tools to trade that I ever learned was with a commodities trader back in the late 80s, early 90s, Kenny Roberts. And this was basically their profit-taking objective. And, you'd hunt for W's in commodities, and the simple price objective would just be nothing more than to buy the W, risk against the low of the W, and use the 50% level as your profit objective. Really, when it comes to trading and making money from trading and all that kind of conversation, try and keep it as absolutely as simple as possible. Location, indicator confirmation, structure, go. And on the site, we like to call this setup our El Tangonator. We used to have a student on that. We actually first call it Hollywood Nick because we had this guy from Hollywood. What a coincidence. Years ago on the site, and he absolutely loved this setup, and he said, this is what I'm going to say, so I named it after him. And then, what's really weird with these sort of teaching websites I've found, we've been doing this for about 5 years now, is you get sort of generations that come and go. People, we just had a full generation work their way through the level 3 program, and it's kind of sad at the end of the level 3 program, lots of tears. I've been working with you, Brian, for a year and a half, 2 years, and now it's coming to an end kind of idea. It's an interesting experience running this education program, and sort of I have a new empathy for all the school teachers out there, especially like high school teachers. Well, I suppose junior high and elementary too, where the school, and I suppose to a certain degree the site as well, it goes through sort of like personality shifts as sort of classes move through. We'll get a whole new wave of students come into like a level 1 program, and they often stick together, and it's really cool to see the friendships and stuff that develop amongst the classmates. We got one group out of the UK, and now we're putting together a real estate fund to go and buy real estate in Bulgaria right now. These guys are great. And Raph, I'm still waiting for you if you watch this. I never heard back. I don't know how the market's looking over there now. But anyway, we the first sort of generation of students, one student really liked it, but as the generations move on, next we had another generation come on a couple of years ago, and another student happened to really like this setup, and so we changed this setup name, and not really changed the name, it's just it was staying current. We called it the El Tangonator because Sebastian was from Argentina, and he was one of those machismo kind of guys. But anyway, and that's not an insult, Sebastian. If you're watching us later, love you, babe. Mwah, mwah, kisses. Anyway, the point of the matter here is I learned this setup forever ago. Forever! And I like to give it names for people on the site to try and just help give the setup a little bit of personality. So we're calling this the L Tangonator right now, but it's really, really simple. Location, indicator confirmation, ideally divergence. That's the absolute best scenario. Thanks, Colleen. And then just show me a W. And if I risk the W and I look to take profits at the 50% rule, can I at least see a 2 to 1? Ideally, a 3 to 1, right? I mean, that would be ideal. In this case, this was a 6 to 1 risk reward. Holy for holies. I mean, a professional trader's got to take that trade every day of the week. And as you can see, fascinating as we ran up into GAN's 50% level. We did, yes, go even beyond it, all the way up and tag Mr. Mountain Man. But ultimately, you can clearly see that, you know, if you had just simply said, look, I'm going to take profits at this 11, 12,000 area, I think on balance you did pretty well here. So the really cool thing about this, and this is where GAN really blows your mind, is GAN would even say that this 50% retracement should happen in just about exactly 50% of the time it took for this correction to happen. So watch what happens when we do sort of a date study from peak to trough. First thing that jumped out at me was, holy crap, that was almost exactly 1 calendar year. Which, of course, Mr. GAN would be like, oh, just giddy over. I mean, he's a really big fan of, like, celestial events and all that kind of stuff. So the fact that this took almost exactly 1 calendar year, but watch this. This really blows your mind. If we believe Mr. GAN, then theoretically this rally should take just about exactly half of what it took to come down. And lo and behold, we put that over there, and that's pretty damn close, eh? It looks like it took, and I don't know whether I have the exact low here. Let's see, what is that? 31.28, call it 31.29, 30, yeah, okay, so somewhere in there. So that's this date right here. Let's go like that. 31.28, yeah, right there. Yeah, looks pretty close. So if we listen to Mr. GAN, then we should hit that 50% level right about here. And gee whiz, that basically happened within 2 weeks of his forecast. Maybe even 1 week if you hit that high there. I mean, that's freaky when you see that stuff. So my hunch is, for whatever it's worth, and this is sort of what I've been thinking, you know, like, where the hell is Brian going with all this? Well, the first thing that sort of jumps out at me is, all right, well, if we did a 50% retracement up there, should we not maybe be thinking about 50% retracement going the other way now, since this level has been traded to? So if we take our good old 50% roll tool, and we pull it all the way back down to the lows, you can see that's sitting 84.98. And I hear a lot of people on Twitter and stuff sort of chattering about this 8,000, 8,500 area. I think it's sort of a foregone conclusion that we do have to go down there. The question would be, according to Mr. GAN, roughly when should that happen? And if we just follow his same logic, maybe I'll change this to like orange or something. That should happen at about 50% of the time that it took for the up move to happen. So that would be 13 bars right in there. Something along those lines. Hopefully you can follow that logic. So what that means is according to Mr. GAN, we should be looking for this 8,500 area to be traded to somewhere down in this area here. And that's sort of like, September-ish. My hunch is this might go on a little bit further, but somewhere in this area, it would be only natural for the market to come back to that 50% level. So that's sort of what I'm thinking about here in the short term. What's fascinating about this, I find, is, again, if we go back to Mr. Burchett's conversation, theoretically, we can't really decide whether this market has finished, and maybe we'll just maximize that, finish this up move and is actually trending lower within this range until this 38.2 has been resolved. So what does resolution look like? I guess about a month ago I was pleased to see that we actually did close at a higher high here. So I was feeling pretty optimistic. Like if we change this to a line chart, think M's and W's, that actually made just a slightly higher high. But I have seen in the past that sometimes this might still be very much an M. I was feeling like because we did close higher than that high, that we were pressing higher, and you could make the argument AB equals CDs, pressing up into this area up here, which harmonically would make sense, right? Because I actually like the idea of the market just ratcheting straight up to good old Mountain Man level 61.8, and then crapping out. But the harmonic guys actually, I think on balance, they would prefer to see a clothesline print. Like on clotheslines, we're still not up there. If we change this to the full candles, right, you can see that stab up into there. But on a clothesline basis, I think the harmonic guys would actually like to see us close up here. So I was thinking, this was a higher close, that we were still pointing higher. Now, here we are now testing the other end of the range. And here we are up against a really important clothesline low level, and there is that 38.2. And we often have an expression. I don't know whether any of you guys on YouTube know this. Let's see if you guys can, have you ever heard this? What are we supposed to be thinking if we ever see the market smiling at us? I don't know if you can see that smile. Maybe I'll make a little bigger one. Can you see that smile? That's not really a good sign. If we ever see the market smiling at us, it means it's getting ready to take our money from us. Oh, thank you, Andrew. Good job, Band-Aids. So we're coming up to a pretty darn important level here. Mr. Burchett sitting there going, are you listening to my commentary about 38.2? It's a really good analogy of, this was straight up, straight down. Don't really assume anything about this market until it's resolved. And you can see, I think you can make the argument that this resolution is starting to look like a triangle, something along those lines. So I think our battle lines are pretty well defined. If we start closing below this level, then that's a nasty failure in my opinion. A little disappointed, like I said. We did have a higher closing print, so I was feeling pretty optimistic. But we've seen nothing but down since then, so that's a little disappointing. I could, believe it or not, remember Mr. Gann is just floating out there. I could see some sort of big sort of like FU dump and then ratchet back up. That wouldn't surprise me. Because this is a higher closing high, maybe, if this is actually going to M out on a clothesline basis, maybe we have to do something like that down the road. That wouldn't surprise me either. This is, in fact, we used to have a student on the site, and he used to like to call these, especially like, again, if we go back to a clothesline, we usually call these dirty bottoms, right? Where, dirty tops, where you're actually making higher highs. If indeed this is a dirty top, then we probably do have to go through this low and make something like that. And does anybody know what we call this kind of pattern? And I'll put Oh, I don't have it. Boo. Yeah, where the hell is it in this damn sheet? Somewhere in here. There it is. Something like that. Dun, 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 dun. Brr, brr, look at me. I'm a megaphone. So, I don't know. You know, maybe we have to do something like that, but I'm not going to say that this is a clean top here by any means. And, you know, we might just get that little FU into Gann's window down into the 84s. These lows hold. And we have to carve out a megaphone, which means we have to come right back up to the top and test these highs again. So, not really a clean message here in the market either direction. Kind of messy. And this is sort of why I was like, when I started this, I was kind of like, I don't know what to tell you guys here today. You know, we're not really in a very good trade location per se. Right? You know, you can see where 50% rules are. That's just WD Gann. Interesting enough, you know, that would be a profit objective, right? So maybe guys who are hitting like reload short zones here. If we drill down to lower time frame, they're going to be taking profits coming down into that level, not putting on new positions. And then, you know, like if I wanted to be a buyer, then I think you got to think things like reload zones, and notice that's way down here. And I absolutely love when the market does a reload zone within a reload zone. Those are super sexy. It's like you're getting like two sort of trade location messages. So if you ever see these sort of overlapping reload zones, that to me is super sexy sex for trade location. So here we are here. Are we here? No. We're still up here. Right? So I can't really get too excited on the buy side either. Like I said, this is really, really messy right here. Let's see, what else can we sort of impart on you here? I suppose, you know, we can start to sort of dissect what does this look like in here. So this would be sort of like your investor message. And, you know, if we can hold these lows and start making 3 higher lows here, this might be the extent of the correction. But it's way, way, way too early for me to make that kind of conclusion. For me to think that we're not going to dump down into reload zones, I'd have to start seeing some serious sort of consolidation in here. The one good thing about this is if this is trend continuation, that's where we bring up the little model called the bot setup. And the bot setup requires, number one, that we're in sort of a trending market state, which I think you can make the argument that's what this was. Number two, the correction off of the top comes to at least 33%, but no more than 66%, so that's been validated. Yeah, I'm not really talking, I appreciate the comment there, Peter. And we can just throw on the full meal deal. If anything, I think off the weekly charts, and this is looking at Colleen's Coinbase, you know, I suppose each and every one of these exchanges are going to be slightly different. But I want Colleen to make money, so I'm going to just primarily use her market so that she has the levels all nice and clear. Right? Are you still on the call there, dear? Or is she gone? Oh, no. Okay. Yeah, there she is. Colleen holds a special place in my heart. Everybody should be aware of that. If she wasn't married, I would probably propose. Anyway, I gotta blow my schnoz. I don't want to put you through this torture, so I'm gonna put myself on mute a second. And I'm almost through this cold, man. I had a nasty cold that just picks up when you're on age. All right. Anyway, I'll be right back. I gotta do some business here. Hold on. Okay, where's I think I'm still recording. Maybe that one. There. All right, sorry about that. I'll take a sip of beverage while I'm at it here. All right, so where were we? We were talking about could this be trend continuation trade? It might. I mean, you never know. Market will do any old damn thing it wants. If anything, what I like, the approach that I like to take is there's an old expression in the market: strong opinions loosely held. So, if you have a setup, obviously follow your setup. But if the setup bottom is broken, like there's a little pharma stock that I bought recently on a breakout, and it's just coming screaming right back down to the bottom end of its range, and I might get stopped out. I bought the W, I won't show you here for lack of time, but really good example. If the bottom of the W is broken, I just got to walk away. So strong opinions loosely held, trade your setups. If the setup fails, then just, put your ego away and just move on to the next trade. But anyway, back to our conversation here. If this is a trend continuation, then what I really want to see is I want to start seeing some serious, higher lows. And ideally for my bot setup, I want to see 3 higher lows. As well, too, I'm a really big fan of trend line breakouts, and like I said on the site, a lot of trading models that we create, I just simply name them after students because that student particularly likes the setup. And I love trading trend line breakouts. Typically for a trend line breakout, I want to see 1, 2, 3 points, and then on the other side of the trend line, let the market break the trend line. And then on the other side of the trend line, we're looking for W's. This one's going to be a little more challenging because we actually have this big potential trend line that could stop this thing in its tracks. But this is probably going to set up more like a daily picture. But if that trend continuation idea is going to work, then I think what has to happen is we have to resolve this down trend line while maintaining 3 higher lows here on the uptrend. So something you can see just right now, we're looking something along those lines here. You can see that we could have used this as a number. So we've got 1 low, 2 lows as I've sort of drawn there, but you notice that last week's price action went through this low, so now our count is back to 2 lows off of that low now, and we can put away this trade now. And so really what we want to see are 3 higher lows, right? Now you can even see that this is a bit sloppy here. So, I mean, you never know. The first leg of the bot correction to set up that trend continuation trade it's technically been validated. So we can clone that and then move this over to, say, like here, and project that off of that low, which was $9,071 on Colleen's Coinbase. So sometimes on TradingView, the best way to do this, because we don't want to change these numbers, you're going to have to zoom in really closely after you clone that first study and then just manually drag this to the actual point. 71, so we're getting closer. There we go. So there is 71. Oh, still a little bit off. There we go. Alright, so now we can redo that. Alright, so now the chart looks something like this. And then we can go bot trade. Alright, now this is interesting. Look how the bot entry level seems to be corresponding with this trendline breakout. And also notice that the rally peak, it's almost like the market is setting this trade up. So, at this point, we'd like to see 3 higher lows. Ideally, perfect scenario, I think, would be break this trend line here this coming week, and then W on the other side of this, and away we go. But that's asking quite a bit, right? That's asking that these lows here hold. It's then asking that we actually form a W on the other side of this trend line. So, you know, and I mean, just look at the time window. In this kind of scenario, we're talking at least, whoops, that's not what I wanted. We're talking at least, you know, just using this scenario, 10 weeks. You know, that's like 4 months, right? Or not 4 months. How long is that? That's 2.5 months. Or basically into the end of November. So there ain't no hurry here whatsoever looking for that kind of continuation. Well, and that's just it, Colleen. If we do actually have to go down to that 8,500 Gann level, then that's going to break all of these. That will actually confirm this M. And, of course, you know, from a bot perspective, that's going to reset the count. And then we have to start all the way back at 1 again. So as it stands right now, Colleen said, well, you know, that it might come after the break of that 8,500 level. If that's the case, you know, like I said, for all you YouTubers, right, our count would be 1 is right now. And since we broke this low, we potentially had a 2 there. But now our new number 2 is right there. And so ultimately, we still have to wait for the third low. And, you know, I mean, this is just the setup that I like to use. This doesn't necessarily mean this is a setup you're going to use. It's just the way that I like to interpret price action. But we need to see the third low and then, you know, resolution higher. So if we have to dump down into 8,500 and break these lows, then that starts the whole count all over again. If we have to go down, say, here on that Gann magic date down to that 8,500 area, right? Actually, where would 8,500 be? It would be right in that area, eh? So dump, then we have to start the whole count all over again, and that'll be our new number 1. And then, you know, maybe we do something along those lines and start doing our count. This is 2, and then we need a third one over here, 3, yada, yada, yada. So the point being that if these current lows hold, and that's a really big if, for trend continuation off of the weekly basis, I'm going to have to see something that looks something along those lines. That's a really, really big if right now. And so why do I say that? Well, the problem that I see right now, you know, this is the weekly price chart. If we drill down to lower time frames and take a look at this, everybody, you know, I did mention, what was the pattern that I mentioned right at the beginning of this conversation? That's an excellent sort of market structure. Anybody on YouTube remember? We went like this. And then you can do the exact opposite, right? Right? Well, yes, head and shoulders, but really what is a head and shoulders? Anybody on YouTube? Remember what we said? Thank you, Colleen. Colleen knows the answer. She's in the hangout here. Anybody on YouTube? What did we call this pattern? Very good, Dan. But you're already... Are you alumni on the site now? Have you taken all 3 levels? I think you have. But anyway, point of the matter is fractal was what I was looking for. And hopefully everybody sees this and goes, oh, crap. If you're a bull, that is. Because we have... right here, this high here, this low here, this low here, and this week, we went through that low. This is a fractal. Sloppy, it's messy, but technically it is one of these. So the fact that we, you know, these lows here would be basically breaking those lows there. So the fact that we went through those lows early in the week doesn't fill me with a lot of optimism just here in the short term. So, you know, that's the weekly chart. If we go and look at, say, like the daily chart, what does it look like? All right, so we just replicated that chart, but now we're looking at a little bit lower time frame. The daily. Maybe I'll just put this away for now. There is that GAN 8500 reference level. And now, hopefully what you see here is, remember what I said earlier, what are you supposed to think if you ever see the market smiling at you? Off of the daily basis, actually, this son of a gun's been smiling at us for a while now. All right, if we go up, maybe we should make this a different color, yellow, and then down, and then back up again, and then, So we can actually make the argument the market's been smiling at us for a while here off the dailies. That's not good. And that funny little fractal that we saw was basically, I'm getting the impression it was sort of like the loss of these levels in here. I think it was really the loss of that level. You could maybe make an argument there was a bit of a trend line break there. And you know, you heard me just say a few moments ago, you know, what defines a bull and bear market, right? Bear markets technically lower highs and lower lows. Bull markets higher highs and higher lows. So here you can clearly see we got definitely lower highs. And this kind of reminds me of kind of like last summer with Bitcoin, where we're kind of like, okay, well, we're getting trend line breaks. Just give me a W now on the other side of this. Come on, give me a W, some sort of W. And you can see the market went down, up, down. Okay, are we going to W? And nope. And we end up Ming out. Boosh. Yuck. So, you know, the loss of this level right in there on that CME dump is not encouraging. You know, if we change this original Fib study back to Mr. Burchett's 38.2, you can really see the battle here, right? That M off of 38.2 lost it. The M has now been confirmed. Then we go in W right off of Mr. Burchett's level, rally right back up, right? I think I had said just a few minutes ago, you know, for like the daily guys, I got one hell of a little trade window up here. Where are we here? RLZ. Oops, that's not what I wanted. Let's try that again. There we go. So, you know, Mr. Mountain Man, man, he's just owning this market right now. So you can see Mr. Mountain Man hit this thing again. Right there. Doink. Jerk. Beautiful fail. Right back down against the bottom end of its range. And like I said, now you could actually make the argument that we've got sort of like AB, CD, and there is that, you know, we said Mr. Gann wants that 8,500 level. I'll even put the 50% level on here. There's Mr. Gann, and Mr. Gann wants this date. So you can see there's a really sort of big bullseye on the market to come down into that level right there. And unfortunately, that's going to remove that sort of trend continuation bot sort of setup. There is the bot level right there. If we do have to dump into here, then it means that, you know, we got another, you know, few days or more, probably months, I beg your pardon, weeks at the very least of trying to, you know, form 3 higher lows here to justify taking the risk. So really interesting, you know, level. This is a huge battle zone, like a, you know, in fact here, why don't we even put both on here? 38.2s. Of course it's backwards. There we go. So 38.2s, 50%, Mr. Gans, Mr. Burchett, and this is a hell of a battle level here. Yeah, also good point there, Colleen. You know, the profile itself, ideally, it actually wants to, ideally, it actually wants to look like a parabola. But what I often find when markets are sort of done consolidating, the profile will actually look very what we call full. in essence, all of these bars will all fill themselves in, or, long and short of it here, price has fully discovered a range and it's explored all of the areas of the profile, and it ends up looking very full. And then that way that the market has also, given all market participants the opportunity to do their business. So long and short of it here, as Colleen sort of points out, this profile is looking rather holy. There's a big old hole there, huge hole here, a little bit of a hole here. So could you make the argument there's some unfinished business here? Absolutely. And remember, here is that Brian's reload zone within reload zone. That's right down in this area. This is ideal, sort of where I want to be an investor of Bitcoins. And I have heard a lot of argument, that the last halvening events, value mama, that's right, Colleen. I've heard a lot of arguments that, if this last bottom, we had done lots of, and actually I don't know where Tony is, but he did a really great study that showed that the average cost of production for in his particular model when we were studying down here was about $2,500. I know the Hut 8 mining guys, they publicly released that their cost of production is around $3,000, $3,500, somewhere in that area. Keep in mind that we are coming into a halvening event next year for Bitcoin. I don't know whether I have it on this one. No. I got this really cool chart that I love publishing. This one here. And as of this point, actually this point right here, you can make the argument that these cost of production studies that we did right here. This was Tony's cost of production study from back in June. I think it was June, or maybe it was February, I don't know. But he came up with a number of $2,600, but basically those will be doubled, right? So basically $5,000, or I guess $5,200. So I actually really do like the idea of investing in Bitcoins. I highly encourage, remember we're rational analysts, so we're supposed to be, doing some fundamental, what is value on the asset that we're buying. And anytime you can buy a commodity at or near the cost of production, well, then you're doing pretty good. So like I said, I think we could make the justification why the market bottomed down in here based on those cost of production models. And, maybe we come down to sort of that $5,000-$6,000 area, which is going to basically be double what this was heading into the halvening event. That would make perfect sense. And also, too, on the actual halvening event, like we saw with Litecoin this summer, usually the market rallies into that event because that's when the public is actually going to be paying attention. If the halvening event and we do our fundamentals, the new cost of production is $5,000, with Bitcoin being, front page news and in the media, is the market going to allow the public just to quietly slip in and buy at $5,000? No. It's kind of like right now. Is the cost of production of a Bitcoin right now $9,600? No. We know the cost of production was down here. Market gets ramped up. Public's all, crypto. Are they going to be afforded to buy Bitcoin at value? No. Right? And when the market's, and this kind of pissed me off because I sent like tweets and stuff to the people at CNBC. Please talk about cost of production. And yet nobody seems to get that with Bitcoin. I don't get it. And, they're like, Tom Lee says Bitcoin's going to go to $100,000. Why? Well, because of, money flows and ETFs and, institutions coming in and buying. Well, what I want to know is what's the value of one of these things? And the only way that you can really determine value is what does it cost to actually make one or mine them? But anyway, Brian's going off on a rant again. Sorry, everybody. But anyway, the point that I would just simply make is that, back to our original sort of little tutorial here. Where did I put that? Right here. I can't really think about investing in Bitcoin right now. Actually, Value Mama made a really good point there just a moment ago. So I thought, we're actually, just based off of this study here, you can see how we're sitting right at value high here. And technically, if we do actually accept back into value, then ironically enough, I think, first and foremost, this MUOC has got a big sort of bullseye all over it there. But according to Mr. Hoagland, we should actually trade all the way back down to value low. Now, I don't know whether that happens or not. I think there's enough institutional interest, and again, that cost of production kind of idea. I can't see Bitcoin trading substantially below the cost of production unless, we have something like, the U.S. federal government comes out and actually just outlaws the ownership of Bitcoins. I suppose it could happen. I mean, if you want to, the irony of it all is that wouldn't even be unprecedented, because the United States government has come out and outlawed its citizens owning gold back in the 1930s. So it's not like it hasn't happened before, but I would say that's a pretty long shot, in my opinion. So that's sort of, how are we doing here? Can we even justify thinking about investing at these levels? I think that's debatable right now. And if we go back down to dailies and we, if we just sort of study, let's just even study the range of distribution here. There is sort of that kind of, are we going to accept back into value? And if so, then we got a lot of cleaning up to do. I think right now we're really having that debate. And actually, Colleen, this should be great information for you to sort of validate, because Colleen's been working, I think she just did the level 2 program, so she's been really working hard on this concept of volume profile and value. I think that's a really, really good analogy of, are we going to accept back into value? And according to Mr. Gann and according to my AB equals CDs, this would be, I think, an acceptance back into value. And if that's the case, then we got quite a bit of cleaning up to do. I'd also say, too, just looking at this Coinbase chart, wicks and tails like to be eaten. And notice we got this funny little tail right there that looks awfully suspicious. Notice the bottom of that tail is basically right at the MUOC point there, right? Obviously markets never move in a straight line. I mean, this thing might just fall right out of bed down into those levels. Who knows? But if we did accept back into value, and where are we thinking this thing could work its way, my hunch is that's got a big sort of, kind of like, I'm always having a hard time finding these damn icons now. Where's the magnet? Magnet, where are you? Probably someone can see it and goes, it's over there! It's over there! What are you doing? No, don't go there! It's over there! Oh, well, anyway, I was going to throw on the magnet icon, but I don't see it on here. But I'm half blind as it is anyway. Nope, I just don't see it. Oh, well. Darn. I hate when I just stop everything because I can't see the damn icon. Anyway, I was going to put the magnet icon right there, sort of drag it towards there, but I don't see it. So, oh well. Can't do that today. All right, so how do we say this? If we look at, say daily, I think you could make the argument that we're coming down into a very important level here now. I would encourage, those people that sort of fancy themselves as swing traders, for you to keep a real close eye on how we act against these lows. We could very easily hold these lows, and you can see how we sort of dumped into these levels previously and then ratcheted back up. We could very easily ratchet our way back up and even just come back up and kiss the trend line. And that's that's just basically a revisit of 10 grams. So, good $500 to be made on the Bitcoin price. I'm a little concerned about people reading too much into the market right now because we are in this holiday session. And, I mean, you can see it on the chart. whenever you get into sort of these low volume sort of malaises, it's very dangerous to read too much into price action when we're doing this. I am encouraged to see that MACD is trying to make higher lows, the histogram per se. You can see a higher low, and I don't know whether this was a higher low, 156, 155, yeah. So MACD histogram is painting a little bit of potential divergence here. My overbought, oversold indicator, Williams percentage R, isn't quite flashing oversold just yet. I'd have to see a reading below -80 on my Williams percentage R modified indicator for me to flash an oversold reading. And then also too, if we look at, just simple things like RSI studies and looking at structure in RSI, we just broke to new lows here. That's never good. But, maybe this thing W's out and away we go. What I'd have to see out of RSI for me to sort of change my negative thinking here is, and actually Julian's been doing some great work with RSI recently, so I'm really proud of him for his hard work there. But I'd really like to see some of these downtrend lines broken. They're pretty darn steep, and actually we got to a point last week where we could have broken out. We could have broken out, but then she just crapped right out. And unfortunately, RSI, you can see, we actually broke a very powerful consolidation to new lows. So I'd really like to see some sort of structure here in RSI. At best, maybe what we can do is W out here and accept back above this trend line, which paints sort of maybe a stab up into this area here. If we just project that, we just project that out, somewhere up in that area here. But we're very, very early on that. And I really like Julian's work with the RSI recently, where he just simply says, look, as long as we're below the 50 level, then this is a bearish market state. And I hate to say it, but I'd have to agree with him on that. There is sort of the 50 level. You can see how we came down into this. Are we going to bear out? No. We're still feeling bullish. Then, oh boy, okay, we lost it. Okay, we recaptured it. All right. And then, oh boy, here we are losing it. And now you can see we're sort of putting in structure now. And this, in a weird sort of way, is now becoming pretty stiff resistance. So, not going to sugarcoat it. There's very little internally that's going to sort of justify getting too excited on the bull side here just yet. So we are in cleanup mode, and also too, I'm really worried that, like I said, I was shocked earlier this morning. I went into Trading Views sort of lounge here, and they're all looking at things like 1 minute charts, and it's just like, oh my goodness, please guys, be careful here. Try not to read too much into these extremely low volume holiday sessions here. This is pretty dangerous. Now, that's sort of your daily picture, right? If I go off of, we'll take this one step further, and probably this is as far as I want to go, because I don't really want to get into sort of day trading with you guys on YouTube. But, if we go down to things like the 4-hour chart for that swing trade kind of thinking, what do we have working here? So here's our sort of 4-hour. I'm a swing trader, A, B, C, Ds. If we just fall right out of bed, we're probably heading back down into areas like this. On some of the derivatives markets, I was hunting things like bearish bot setups on these failures. You can see the pretty M here. That came in. There's Mountain Man. There's that trend line failure off the higher time frames. So I was doing up bot setups, something along those lines. And saying, all right, well, you know, we did a 33% retracement. We have not gone beyond 66. We came up against that trend line and failed. So, you know, if we do continue working our way lower, that is basically that AB equals CD kind of thinking. Does that set up a trade for us? And I think that the swing trader is probably seeing something along these lines right now. Alright, so AB, and you know, I just eyeballed this. It's not totally accurate. If these numbers are slightly off, please forgive me. But AB, CD, bought trade, one high, two highs. We had a third high here. And what I liked about this is we had a nice little FU move against this third high, which put in this high. And earlier in the week, I was looking at this going, okay, well, if I risk against these highs, and I've also got this high defending me, I've got three highs, man, I should really be short, especially off this tight little failure right here. And, you know, actually, here's a really good example. Remember I'd said earlier that the profile, if it's ready to explore a new range, notice it looks very full. See how that looks pretty darn full in here? I mean, we might have to come back and fill in this a bit more. That's possible. But that profile doesn't have like those big holes in it that we were talking about earlier off of those other profiles. So there's an example of a profile that's looking relatively full. And one could argue just looking at the profile, remember the profile wants to look like a parabola. If that's the top end of the range here, where is the POC? It should be about midpoint of the parabola. So I drag my parabola. Well, that's pretty close. So, you know, even just looking at this kind of range, and we'll put the midpoint of the parabola off the POC, you can see that basically if this was a nice parabola, that means that we probably need to come in and explore all this area. And gee whiz, notice that how that lines up with that AB equals CD objective. So for the swing traders, I'm kind of thinking that we have pretty good structure. It's basically a failure of the POC, and looking for an objective down here into sort of the 8,000 area. Specifically, I did take this trade on OKCoin forwards. That is that level on OKCoin forwards, about 10,000. What the hell is that number? 10,300 and change. I think I'm short from like 10,318 or something like that. And you can see how this thing's working away. The bot has built-in rules to help me try and avoid taking losses. I don't mind if a trade setup works sort of in your direction. We get to sort of half of the anticipated move, and you just simply say, look at, you know, one of the sort of pitfalls that a lot of new people into trading come into is they often see a winning trade turn into a losing trade just because, you know, market reverses, and psychologically it's very difficult to deal with that on a consistent basis and stay positive and all that. So, you know, like on my little bot trading system, if we move to 50% of the anticipated range, then I can move my stop to scratch. So that's basically where I'm sitting. If the market can basically hold these lows, turn back up and revisit that 10,000 area and accept back above 10,000 area, accept back above the POC, then I'll just walk away at scratch. Big fucking deal. You know, next bus in 10 minutes. What I did notice, and this would be more sort of talk for like day traders, but I did notice, I'll sort of finish off this broadcast here today. I sure hope you guys have gotten some value out of this. We have this pretty important trend line. You can see it's pretty thick off of this market structure, down, up, down, breakout. So off of this market structure level, this trend line, I think the market is actually playing with this trend line very closely right now. And I noticed that, you know, move stop to scratch level. This is that CME event, right? Market came down into that trend line, Notice how the market is trying to hold that trend line desperately. We started to paint some higher lows and higher highs, so that's encouraging. But then, you know, about midday yesterday, I noticed some problems starting to develop on this this idea. I think probably the first thing that jumped out at me was, I don't think I have it on here, do I? Nope. Fudge, I got rid of it. Actually, why don't we do it off of... This is Colleen's chart, eh? Okay, so that's 4 hour. I suppose what we could do is just simply say, this was that CME event right there. So I kind of asked myself, okay, well, heading into the weekend, the CME guys are gone. You know, the counter trend rally following the CME event dump, this high right here, I think is a pretty important reference point. Because in essence, if the market can accept back above here, like this was the big dump, this was the reaction following the dump. And so now, you know, the buyers were exhausted as of this point. Why? You know, you also notice too that also corresponds with this breakdown. So do you notice how this M structure top here is also that counter trend rally peak? So this is a pretty important reference point. If Bitcoin is going back into a bull, then this level has to be taken out. And hopefully everybody remembers our conversations from a few minutes ago. If we draw a fib off of this low back up to this sort of CME event pivot high, and we do good old Ray Burchett, oh gee whiz, there's Mr. Burchett sitting there at his 38.2 level right there. And I mean, I suppose you could say, well, what happens if it's there? Well, gee whiz, now 38.2 is those levels. I suppose you could say, well, Brian, shouldn't you be doing it there? All right, well, 38.2 is in here. I do like the idea of doing 38.2 off of this because this dump was this CME event. So clearly, you know, some higher time frame player said that, okay, this is it for the rally. It's time to start hitting this son of a bitch. So just studying this range and that CME event, the reaction off of it, good old Ray Burchett, 38.2. And lo and behold, look at the profile. You can see that this is basically the bottom of value right down in this area here, right? So if we go like that. So, coming into this area, right, there's a bottom of value there. So coming into this area, this is actually where the fight, if there's going to be a fight, this is where the fight needs to happen. And this is where the bulls actually have to step up. Not down here, right here. And you notice we came into this level and then backed off. And then we came into this level again and then we backed off. And then we came into this level again and we backed off. We gotta punch through this level. If we punch through this level, then I think there's a pretty good chance that we can rally right back up top here. But we can't make any grand conclusions about Bitcoin price until we see this 38.2 resolved here. And if I go back to my OK coin chart there for just a moment, what I noticed was, where the hell is that? There it is. If we pull up things like momentum studies, notice as we were working our way up here and making higher highs in price, we look at momentum and, oh boy, it's making lower lows. So that's not good. So in essence, that's actually a pretty good example of divergence. At the very least, you know, if you are trading off lower time frames, you know, crazy trading view people, they're trading off 1 minute charts, which I think is like almost suicide in this kind of market state. But, you know, I would argue just even looking at like this hourly chart, if you're a bull, you have to wait for this divergence to play itself out before you can get back on the bull side. Now, one thing I noticed which is really cool here this morning was you can see how that divergence played itself out. We dumped into this level, and so this now on OKCoin, and I noticed that when they do big fat round numbers, it's probably a pretty significant level. And notice this is 97.55. That's the high right here. Oops. Come on. Ugh. 97.55 right there. And then notice this high. 97.49, big fat round number. And then this high. 97.50. So clearly, and psychologically, and there's of course 33%, but what we probably should be doing is asking where Mr. Burchett is. There he is. Oh, all the way up at 10,000. Did I draw that right? Oh, yeah. Oh, no, that must be backwards. Hold on a second. There we go. So he's sitting 97.60. Hopefully everybody looks at this and goes, okay, psychologically that makes sense. 97.50 is a very important psychological level. If we get back above 97.50, then, markets, especially when we're dealing in these kind of dollar sizes, $250, very normal, very healthy, very natural, sort of psychological level. So right now I might argue we're sort of 9,500 area. And if we accept back above 97.50, then I think we probably got a pretty good shot at rallying back up to 10 Gs. But as you can see, I have to say, trend continuation, guys, we can actually make the argument for sort of lower time frame players that now I have to put this back. We had 33% retracement, no more than 66. Technically, the bot comes alive for now a lower time frame level. And I did find it fascinating this morning that you can see how the market is basically creating a trading range here. Top of the range, bottom of the range, top of the range, bottom end of the range. So this actually becomes pretty simple. If we can accept back above the top end of the range, I think we got a pretty good shot rallying back up top here. If we crap out and lose the bottom end of the range, this sort of 9,500 area here on OKCoin, then we've got new bots that all start to come alive, and the lower time frame traders probably going to be respecting these levels. So that's sort of the state of the market right now. The only thing I would sort of add to this, and I thought it was interesting, but it never did come through, we actually had algos start to get really active on the long side of the market on that potential breakout. You can see how algo went uber bull here. CME, of course, they're closed, but algo went uber bull on this big sort of doji bar event, because keep in mind at some point this doji bar was really strong and just ripping up. And the simple rule for the algo, I find, is that you have to let the algo go uber bull or uber bear, and then you have to hunt for some sort of structure. And I think the structure on this trade is just simply this W, right? So down, down, up, down, potential breakout, right? And so the structure would just be simply accepting back above there. So, had the market ripped up through the top there, then I think we probably had a pretty good shot at jumping up back up into that, 10,000 area. But market did not break out. Market lost Uber reading. So now algo's just sitting sort of back on the sidelines now, not really doing anything. So, interestingly enough, I think actually, it's a fairly simple conversation here. This happens to be off stamp. If we can accept back above these areas here, I don't know whether the algo is going to endorse the trade, but I can understand the W's, and I can understand trendline resistance and big fat round numbers, $10,000 as targets. And interestingly enough, if you play this W, that is 2-to-1 on just a revisit of that trend line. You could also make the argument, I bet, that this is going to be a reload zone level in there too. So if I go there to there and go reload zone, yep, you can see that's basically just going to be a mountain man tag. And if we can accept back above here, then that means I hop off my short at scratch. That's just the way it goes. So that's sort of the state of the market right now. The only thing I would caution all of you people, especially people who are following on Twitter and in the public and stuff, this is a study that I like to follow that's just studying volume. right now. And as you can see, I'm not overly impressed with the money flow here of these moves. This feels like holiday session trading, very dangerous. You can see where the top of value is here. Again, that sort of conversation of, we're at the bottom of value. Could we rally back up, test the top end of value? Sure, that's totally doable. You can see the potential inside bars here. This is Coinbase daily chart. It's interesting, off of things like Ethereum and stuff like that. We are at interesting trade locations, and kind of like what we talked about before. The professional trader, I can completely understand. They're going to want to try and come in against the bottom end of ranges. And look to be selling against the top end of ranges. So I can completely understand if somebody wants to take a long shot against the lows here. I would just say that I do not have indicator confirmation here that we're trending higher. If anything, what I'm kind of thinking is, okay, we might get a little pop back up top here. Maybe even candle body highs right up in that area. Maybe blow out my my bot short idea at scratch. I think that would just simply be a conversation about us accepting this trend line and probably having to come back up and tag this trend line and filling in this profile here. And the Friday video, the free video that I did for people was I just simply said I thought this was our counter trend window through the holiday weekend, and that's sort of what I expected. At any given point in time, we could easily crap out here, and if we do, you can very simply see, you could draw up your same levels off of Coinbase and Stamp and all that. You can clearly see if we lose these lows, then it means the bear's still in control, and away you go to the downside, and this short that is working right now will just continue working away. Okay, I think that's about all I wanted to say today. I think I've been talking for an hour or so, so I hope you guys enjoyed that. I hope I've given you some levels to think about, given you some different perspectives. Colleen, did you get any value out of that? I don't know if Colleen's still here. Colleen was pounding the table this morning. Where's my broiler chickens? I want my broiler chickens, damn it. So we get it. We got the endorsement from her. So I think I'm going to leave it at that for today. I'm going to head off and hang out with my son for the afternoon. We'll see what Bitcoin price action gives us. You never know. I mean, insanely low volume market state right now. Don't be surprised if we have some chicanery all over the place here. Not really a very good trade location, especially for investors. I think you got to cool your jets. But remember, I'm not giving investment advice. All I'm telling you is what I'm doing with my money. If you need help with trying to figure out what's going to make you act in the market, that's what our trading plan course is all about for level 1, and helping you identify what's going to get you to act, helping you identify what type of risk taker you are, helping you identify when you're going to participate in the market and why. So, if you do need help with getting to that point, and as a lot of people here on the YouTube channel who are site veterans have attested to the YouTube chat room here, I think we do at TRI a really, really good job of helping you articulate how you are going to participate in the market. Remember, everything that I've said here today is purely Brian's opinion. And, I don't know whether you on YouTube know what Brian thinks of people's opinions, including his own. But one of the first things that we learn in the course is that people's opinions are just that. That's all they are, is just people's opinions. You should never risk your own your own money in the market based on someone else's opinions. That's just a potion for disaster. So let TRI help you figure out what speaks to you. What do you like? There's a bunch of time-tested rules. that I'm going to impart on you. The basic principle of location, indicator confirmation, structure, go. It works. Let's get you educated to the point where you can see these trades. And then, as I just told all the level 3ers that just graduated through the program, ultimately what I want to build is a whole bunch of people that can be emissaries for good behavior out on the net, and we can sort of spread the word. What does a good trade look like? What does your trading plan? What should it include? How do you set yourself up for success? That's the whole goal of this whole adventure. I guess we'll finish off with we are coming up on a new school term here. I had mulled over the idea of doing a contest for a seat in the level 1 program for the term coming up, but I only got a few responses, and I don't think it's really a good idea for us to do a raffle with like 3 people in the raffle. So, by all means, usually we get quite a few views of these weekend shows. If you are interested in taking the course and you would like to participate in that raffle, that's not a bad idea, but would like to see some maybe post in the comments that you'd like to participate in the raffle, and if we can get a good 10-20 people in the raffle, then I think it's probably worth doing. The course starts I think around the middle of the month, so we're on the holiday weekend here. Well, that's good, Peter. Yeah, I've gotten a lot of positive feedback about this course and the way that we teach the course and how it's set people up for trading. In fact, you want to see, so this is ultimately where I want to get you guys. Maybe this is a really awesome way to finish this session. I want you to get to the point where this gentleman is. This is exactly what I want for all of you, but I just don't know if I can find the tweet, because this is sort of exactly what I want to see happen. But here it is here. This gentleman got to the point where he now can understand setups. He now can go through and vet his own trade ideas. And he took the full course in the level 3. We teach you derivatives trading for doing things like options trades in commodities. But in essence, he's gotten to the point where he identified what he considered a very good sort of trade idea. And he just basically exercised his plan. And, any of you are curious as to whether this trade actually worked, go pull up a silver chart and just see what happened. But in essence, in his tweet, right, asymmetrical silver trade setup, thanks to CRI Investor, CR Investor, that's us here, for the level 3 course, yada, yada, yada. And it was really cool, like on the site and in various different social media and stuff, people are like, wow, this tweet aged very, very well. So it's just such a good analogy of what it is that I do and what I would consider a success story. And, this gentleman is exactly like that. So, if you need help, just reach out. I mean, we try to keep the course cost nice and low. I mean, it's like $1,000 or something for 3 months worth of intensive work. And, the feedback that I get for this course is that it was well worth the money. And they look at the market from a completely different perspective for the rest of their lives. So, if you'd like to participate, please feel free to reach out. If we get a whole bunch of people that are like, yeah, I want to get in that contest. Yeah, I want to get into that contest. And, maybe post a comment. Like I said, we got maybe about a half a dozen people that are in the contest right now. Let's get that number up to like a good 10, 20 people, and then that way it's a half decent raffle. So just post in the comments. Yeah, I'd like to participate in that contest. So. Okay, I think we're going to leave it at that for today. Hope you enjoyed the offering. Have yourselves a great afternoon. If you do have questions on YouTube, also, post in the comments. And I'll be more than happy to try and answer and help. Everybody, we've got Nana kisses and hugs from Colleen here for Liam and I this afternoon. Thank you, Colleen. Appreciate the PMA and the karma. And that's the one thing I absolutely love about this site is we're all here to try and work together. I don't like jerks, and frankly speaking, if I see somebody who's trying to grind TRI, I step in right away and just put the kibosh on that. And I think we create a really cool learning environment for people. Positive mental attitude, the PMA for the win. You see me doing that all the time on Twitter and stuff. I think that's key for learning. So, all right, why don't we leave it at that? Have yourselves a great day. Thank you very much, everybody, for your participation. Hope you got some good value out of information I told you today. All the best, and bye for now.